Welcome to How Stock Trades. In this video, we're going to be doing a Warren Buffett analysis. So by the time you leave, you're going to understand what is the price target of the SoFi stock. You're going to walk out and you're going to know a bull, base, and bear case scenario. So as you can see here, this stock has been on a downturn. If you're here, I don't have to tell you. So let's just skip over this right now, shall we? They just reported quarterly earnings right now. And as you can see, they had a revenue of $321.73 million, up 48% plus, and they beat by 37.64 million. Their Q1 GAAP EPS was negative 14 cents and was only a penny off of the negative 13 cents consensus. The new members added was around 400,000, quarter end totals members up to 70% year over year, nearing up to 3.9 million. If you go in here in the company, they now expect Q2 adjusted net revenue to be around 330 million to 340 million versus the consensus of 339.2 million. However, here, if you look at the SoFi expectations for the net revenue, you're getting anywhere between 1.5 billion to 1.51 billion versus the 1.44 billion consensus. Now, again, this is up from guidance of 1.47 billion they issued back in April. So the reason why their guidance has shrunk and now they just basically increased their guidance was because they're trying to adjust for the U.S. government extension of the federal student loan payment systems, right? So they're just adjusting revenues ever so slightly. But what most people don't understand is there's a difference between different grades of student loans. There's the federal student loan and there's private student loans. Now, if the federal government were going to be forgiving the student loans, they're most likely going to be doing the federal more also over the private, right? And I think the refinances, they're all private for SoFi. And we're going to dive deep into how much do they have and how the growth and all sorts of things here. So if you were, let me just make my head a little smaller here. If you go in and take a look at the student loan here, there's been a decrease in 2%, not too much. And I bet you once the student loan moratorium ends, this is definitely going to be increasing. Now, a good telltale sign about the housing market is you could take a look at the home loans here. You can see that it's down 58%. And so if people want to buy a home now, I don't think it's a good time. This is a good time to wait it out and get in on your possible dream home, but never tell them it's your dream home because then they'll try to upsell you. Now, if you go to personal loans, you can see that there are 151% increase from 2021 to 2022. You can see that jump in personal loans. So people, and this is a consensus that I've seen across many banking stocks, right? And I said banking, and I'm going to be a little bit more clear why I said that. So there's the insides there. So this is the general trend right now, what's happening with the economy. A lot of people are taking on debt. Personal savings are decreasing, okay? And now for the whole banking thing. So as you can see here, this is the official letter from the Office of the Comptroller of the Currency, the OCC. And, you guys know this is old news, January 18, 2022. But just in case if people don't know this is a bank charter. And they got approved for that. And just to let you guys know, to get this OCC, it's a process that's very difficult. If the OCC thought that SoFi was going to go bankrupt, they would never do such a thing. Fingers crossed. But no, for real, on all kids aside, this is very difficult to get. Okay, and they got it, so that's really bullish there. And if you look at their member growth, I mean, you could just see this. You could just. I want to just put emojis here, and it just starts all small, and then it gets all excited. And I mean, we're looking at this thing's going to the moon here, and a lot of people are adopting this. And then with the whole Super Bowl and all these types of ads that they have with the SoFi Stadium, I see nothing but really good for this company. Okay, now. Let's talk about some sad stuff. So right now it's currently trading at a revenue multiple of 4.5. It was at a extremely high evaluation. In fact, I made a video in the past and I got literally, I got wrecked by the comment sections. People saying, oh, you don't know what they're talking about. You don't know what you're talking about. Well, if you do fundamental analysis, which I'm going to show you, you're going to see that when stocks compress back to their intrinsic value, it's not pretty. Now, the job is if you can find it undervalued under the intrinsic, you're going to make money. So if we do that, First, we have to understand what we're going to be doing. So we're going to be getting the revenue from 2018 to 2021. And then remember how they projected that they're going to be making approximately $1.5 billion in the end of Q2 for the fiscal year. We're going to be taking that number. Since they're free cash flow negative, we're going to be doing an estimation 5% of the free cash flow and then the net income negative. So that really can't determine the growth. So we're going to be using the revenue for that. And we're going to be very conservative. We're going to be giving you multiple spectrums. And I'm going to be sharing with you which one I'm going to be using. So right over here, you can see that we are looking here at 2018 to 2022, and we're looking at that revenue, like I told you, for that fiscal year. They're growing at this rate based off of their numbers at 54% for the past couple of years. Now, we're going to take this revenue and do an estimation of the free cash flow. Usually free cash flow is around 5% of the revenue if it's a good company. And by doing that, we're going to be getting these numbers, and we place these numbers in the free cash flow box. Again, it doesn't matter what year you place them in, it just takes the average. We get an average of $37 million for the free cash flow. We're going to extend that out to perpetuity for 2%. And then discount back at a 10 to 15% discount rate. The price target that you get, of course, divided by the number of outstanding shares, is anywhere between a bear case of $9.54, a base case of $13.61, and a bull case of $20.72, in which you can see basically right here. And so this is a more of a bullish stance, but there is a more buller stance, if I can use that word, right? So what I am going to do now is I'm going to be removing the revenues from 2020, 2019, and 2018 because we can, I wouldn't say assume, but we can speculate that their revenue in the future is going to be over $1 billion. If they drop back down to 985 million, you're going to have a lot of problems, okay? But we can speculate that we are most likely not going to be seeing revenues at around 269 to 556. So what we can do is we can drop these out of our free cash flow estimation by just removing them and say we're going to focus more on the high side. So it can only get better, right? And by doing that, it raises the bear case anywhere between $15.80 all the way up to $34.29 with a base case of $22.53. Now that's looking a lot more like it, right? But we are assuming a 54% growth. Now that's a little bullish. I'm personally a conservative Warren Buffett type of investor. So what I like to do is I like to take that growth that they had, which was 54%, multiplied by 75%, saying that if they were to achieve 75% of that 54%, you would get 41%. So in that regards, the price target goes anywhere between $4.24 all the way up to $8.88. Now, if we go back to the stock price, it's currently trading at $5.49. So, and it dipped all the way down to $4.82 to its 52-week low. And so that to me is like based off of what they're worth now, this is it. Anything more, and every time they grow, in which we know SoFi has a long-term growth and track record ahead of itself, we know that the stock price will eventually catch up slowly with that intrinsic value. But again, I didn't want to pay this type of growth I don't want to pay $20 for like a $5, $4 stock. And now it's finally here, guys. So it's a great time, in my opinion, to to go in and purchase, right? And this is just my opinion. So if we go ahead and be more bullish, and I think it's positive to do this, I would say. It makes sense, is to remove the 2020 to 2019 and 2018, because again, those are low revenue numbers. They're going to be making $1 billion plus now from extended to infinity until the life of the company. And by doing that, we just take that 49 to 75 million free cash flow. And from that, the value of SoFi in today's present value should be worth anywhere between $7 to $14.70. So right now, it being at $5.49, this is obviously a buy, and it will slowly transcend to its intrinsic value, okay? So another thing is we, in our proprietary brain machine model, which we created here at Our Stock Trades, it's the stock price again here is at $5.49, but our intrinsic calculation, which you can search any stock you would like, is giving out a $16.10, but it uses beta. So as the stock market becomes more bullish, the price target along with the company's financial statements will be integrated and will give out a more bullish number. Think of it this way. This is more of a long-term horizon, like using a satellite imaging system. This one is doing binoculars, okay? So if you enjoy this, consider liking, subscribing, and hitting that notification bell. You see my dog right here? That is honestly the real Moo, not this Moo right here. This is the real and only Moo. Her name is Coco, but she looks like a cow. At least she has the cow colors, right? So in all jokes aside, if you would like to get 5 free stocks, there'll be a link down below. Here you get free level 2 data, short selling data, and a whole slew of AI monitoring that helps you with your technical analysis. So definitely take advantage of this and get your 5 free stocks. Likewise, if you go to outstocktrades.com, we like to help investors find intrinsic values of stocks and be their own Warren Buffett system so they don't get fleeced by Wall Street. We have been featured in Bloomberg, MarketWatch, NASDAQ, Yahoo Finance, and a whole slew of Wall Street firms that have essentially seen on our mission to democratize financial information. If you enjoyed this video, please consider subscribing and liking. It is a privilege and honor to serve you. God bless you. And I'll see you on the next one.